presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Al in Homosassa. Hey, Al, what's going on?
Isn't it wonderful? This gentleman here with the gold report, right before the market fell apart, ended up with PAAS. We had a 98% gain in a year. And, you weren't 99% proof like Irish whiskey, but we had a good gain there. You always told us to do what we feel comfortable with. And if I lose a little bit of money on the table, I will, but I know that I just pocketed $8,000 or $9,000 in 2 weeks.
That's a beautiful thing, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. So everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We have the Dow Industrials down 193, Nasdaq's up 47, S&Ps are off 12.5. Gold contracts trading up $20, $2,546 an ounce. We have silver up 61 cents, $29.17 an ounce. Light sweet crude flat, $69.32 a barrel. Notes and bonds. A 10-year note up 7 ticks, trading 114.24. The 30-year up 17 ticks at 125.23. And King dollar's down 252 ticks at 101.105. Euro 111. Yen 143. British pound 131 to $1 US. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. And the world of the NQs. Let's go to the NQs first. So we had out here today was pretty interesting, man. I mean, the bottom line is that the market had a chance, to basically get to a higher price. The NQs got all the way up to the 19,150 and then just gave it up in spades and came down, let's see, that's 170. Oh, my God. It came down 170, 270, came down like 300 ticks. Bottom line makes a low out here at 18,827. Now, if we go to the Qs and we take a look at this, what you have here, to me, this is the building cause for lower price. You're in the same area, tried to get higher, couldn't get higher. So what's happening here is that when we had the downdraft that happened on Tuesday, we had volume there of 44 million. We had volume of 26. So you tried to get to a higher high, the highs, and you gave it up. This looks to me like a nice ABC structure down. Now it's going to be intriguing. Let's see, 485.5. Okay. 457, 67, 77, 87. So you get about 22 points. If I do 22, gets you 43. 443. Remember that number. Oh, man, look at that. So if it's an ABC, it's 443. The highs of the low is 442. That's what I think we just did here, folks. Okay, so going to be interesting watching this whole thing shake out. We go to the E-mini. We take a look at the E-mini. Intraday first. So we get the E-mini out here. Same type of setup. Gave it up in spades. We got all the way up to the 55, 57. Then gave it up in spades and went to 54.90. So you're talking 67 points on the way down. Bottom line, you're down 13 points right now. But might take, if we put this sideways again, what you're going to see, not sideways, on a daily, what you're going to see up here is that bottom line is that you have the same type of setup. You tried to get higher, couldn't handle it, going to be lower. Now let's see how this one lines up. This is a smaller one. The S&Ps are definitely stronger than the Qs. So that'd be 56.69. Different setup here, really, though. I'll do it this way. Let's see. 56.69. Oh, that's still $100, man. So I take 100 off that. It's 5457. And the high of the low is 5345, 5457. Well, that's another 100 points higher. So that big bar right there, that's game, that big bar. We go to the SPY and we take a look at the SPY. Try to go higher, couldn't handle it. The gap is 544. We made it to 547. Looks to me the same type of setup. It's the same type of setup. What the setup in the SPY, however, doesn't bring it down to the highs of the lows. That's the differential here. We get into the gold contract. We look at gold, and what we have with gold is that you're up $19. You get 143,000 contracts. Now, the bullish part of this is that you're back out of the lower range again. Yesterday, we went to a lower range as we did on Tuesday. The lower range is 25.37. So now we're above it again, which is 25.45. We go to the GDX. We take a look at the GDX. GDX is up 60 cents right now. Yeah, I don't like this setup either. So here, watch this. We go down on Tuesday with 25 million. You're up today on 10. You got to 37.82. You're at 37.51. I expect what you're going to see here. It's going to be now. See, we're fluctuating on the way down today, even with the dollar lower. So when the dollar goes higher, the market goes out of its mind. Now, what has happened is that we just went from 101.917 to 101.092. And, we'll see how this shakes out, man. If, in fact, it gets some help to the upside once again. We look at the 10-year, the yield on the 10-year. Right now, we're 3.723. And that is the high meaning higher price, lower yield. That's the high for the last 3 months. Let's see on 6 months. On 6 months, it also is. And on a year, same deal. Going back a full year, we're still at the lowest interest rate structure. The high for the year is 490. The low is today 373. And it's a good number, man. That's pretty amazing, actually. There's no doubt. Some of the higher volume equities that we have out here today, you have NVIDIA is up 98 cents, big volume now. Applied Digital is up, that's $2. What is that? So it's after 160 million. Oh, that's an AI deal. Yeah, from NVIDIA. Tesla's up to $10. You have Frontier, look at that, it's down 351, and you have Verizon buying them. That's pretty wild. Marathon Digital's off $1. Inside the NDX 100, the strength versus the weakness here is you have that's Dollar Tree. Yeah, so Dollar Tree is up 6%. You get Tesla up 4.5%. Taken away from it, you got Coke down 6.5%. You have Vinegar is off 3%. Stay right there. I'll be right back, folks. Dow just right now down 204. Nasdaq is down 14. S&P's is down 14. Nasdaq's up 7. Come right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. And Dow's down 267, and Nasdaq is up 15. S&Ps are up 24. And as I said at the beginning of the program, folks, let me tell you something. When you get in, my take is we're going down to the bottom, which I've said a dozen times, okay? And surprises come to the downside. And you can just look at the ES on the Nasdaq and see the selling is fast and furious, okay? When I started the program, the ES just bang down like, yeah, let me see this bar. This is like sick, actually. So this bar was, 18 points in a heartbeat, down, with volume, by the way, okay? So the bottom line, this is going nowhere but, downtown. We take a look at the NQs, you're going to see the same type of setup. Whether this is a human behind the machines or the machine itself, folks, it's pretty intense. So when you take a look at the NQs, you're going to see the same deal set up. Expansion of volume, big time. Now let me look at what we have here. You're 9 minutes into it. Yeah, huge expansion of volume, man. We just did with 97,000 contracts. You're going against, we're going against 10,000 contracts, actually. Now we're at 98. Yeah, you're going against 10,000. Bottom line, we'll see if we get another one, but I suspect we will. If we take a look at the Qs. So the Qs, same type of setup. Huge expansion of volume. Yep, coming right into it. So the Qs are doing what? That's 588 million, and we were going against 554. Yeah, wow. Let's get over to our man, Mr. Tim Wood, folks, as we do every Tuesday and Thursday. And don't forget, folks, you can reach Tim every trading day at ord-oracle.com. That's ord-oracle.com. Tim Wood, what's going on, brother?
Well, we got actually some bullish stuff going on. Let's take a look at it. We'll start with chart 1. And this is just kind of a review. Just keep in mind what's kind of currently going on. But chart number 1 is that ZWAG breast thrust indicator, ZBT, you call it, abbreviation slow. But anyhow, we got a bullish, a bullish buy signal on this indicator. In a nutshell, this indicator has to go from 0.4 to 0.6 in 10 days, which it did, and finish that bullish setup on August 19th. And so it's been consolidating back, but these ZBTs only show up in bull markets. Going back to 2022, part of 2023, three of them came in that bottom formation, suggesting that wasn't a halfway point of a move down, but it was actually the market was basing. And it turned out to be true when we got a rally out of that base. And so I'm looking for another rally here to start. Let's take a look at chart 2. This is pretty interesting. And I think you brought it up on the VIX, going into that low of 1st of August. You remember how fast that VIX went up?
Yes, I do. Yes.
Yeah, we kind of talked about it a little bit. And it says, well, the velocity of the VIX is actually a good indicator. And so the faster the VIX goes to a higher price, the more closer upward that way, you're closer to a low. So the more, because VIX is a fear indicator. Fear is another word for panic. But anyhow, I'll describe the pattern. The bottom window is the SPX. Next window up is the 3-period rate of change of the VIX. So it's kind of a moving average of over a 3-day period, how fast the VIX moves. And anyhow, I got a couple of lines on there. We're at around 24 right now, or we hit 24. And those 3 red lines across, the 3 bright red lines across the chart, this chart goes back a couple of years, are the times when this rate of change of the VIX hit 24 or higher. At that, at the August low, we got to. It's hard to see there. I think we got up around the 30s. We're around 24 right now. So on the August low we got to 65. Yesterday we got to 23.31, and it's 19.90 now. Yeah. Right, but I'm taking a 3-day average.
Oh, cool. I got it. Okay, got it. Thank you. Yes,
right.
yes.
So it's over a 3-day period. So it's a rate of change on 3 days. So in other words, it has to be consistently high for 3 days.
Yes.
One day sometimes can be a anomaly. It doesn't really mean a whole lot. But if you get 3 days, it means quite a bit more. So if we're up around, we did hit around 24, and the last time that 3-day, I forget what it was, but it's in the 30s. I know it went higher than that, but the 3-day average was, high 20s, low 30s. Back at the March low of 2023, it got up around 24, and there's another one in June of 2022. It got up around 24. All the rest of them got around 20 or less, or 20 to 22. That's a kind of a shaded area across there. They could mean minor lows. Sometimes they come at major lows. Well, you get up past 24, you're looking at a low pretty close to right now. So let's see where we are on. Let's just go to chart 3.
Okay, I have it. Yep.
All right, this is the SPX tilt ratio. We brought it up the other day.
Yes.
This is an indicator actually works a lot better at bottoms than the tops. And the last one we had came at the low of August. It was got like the SPX tilt ratio. I take an RSI of it. It gets below 30. In other words, that's when the SPX is plummeting towards. I forget how you get the RSI down. But anyhow, that's not really important. As long as the RSI gets 30 or below, and actually the more below 30 it is, the more bullish it becomes because the rubber band's stretched too much. And so that freaked out that low pretty good. I noticed that's one of the reasons why I'm long on that market on that day.
Yes.
We're almost back down there to 30 right now. So if we keep plunging here, that's going to hit 30 here pretty quick. We're at 35 right now. So the downside, according to this indicator, is probably pretty minimal. I mean, if it's saying around 50 or so, it's not really good. It's not really a good sign, but it gets down close to 30 where we are right now, it tells me that it's a limited downside target. We're probably not going to go down to the August lows.
Okay. This indicator, Tim, did pick out the last couple highs, though. I mean, this is one of the first indicators that turned on you. Yeah.
Yeah, you're exactly right. But sometimes if it gets way up there above 70, it's a real good indicator. But if it just hits 70, it does a fair job.
Cool. Yeah, just stay right there.
Down, it seems to work a lot better. But it's both good ways.
I get it.
I hear the music.
I get it.
So
that's it. It's a beautiful thing. You stay right there, man. We have the Dow. The Dow's down 50. That's up. The Nasdaq's 26. S&P's are off 21. Tim and I are coming right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Tim Moore, Tom O'Brien. We do appreciate the growl and the problem on us out here. We have the Dow down to 29. NASDAQ is up 37. S&Ps are off 16.5. And when Tim and I were talking about the VIX, folks, okay, we had a couple questions, Tim, in the den and on the listener line. He's doing the 3-day average. That's of the VIX. That's what's going on, not the highs and the lows. The questions were.
Yeah, you want to consistently. You get 1 day high VIX doesn't mean a lot. You get 2 days, that means more. You get 3 days, means more. But when panic hits, it doesn't take forever. Panic hits, it's over in a hurry. So a 10-day VIX is really useless because the panic's going to happen in probably the first 3-4 days or 2 days. If you know what I mean.
No, I do. No, and I appreciate you explaining that. It's awesome, man. Totally. Okay, so we're on chat 3 right now, I think, right? Yeah, 3.
Yes. Smith's Crease here. That's so anyhow, so we got panic on the VIX, which is a fear gauge, and you got 3 days is really pretty high, and the last few times you hit a low. Let's just go to chart 4. See where we are.
Okay, I have it.
All right, so currently we're testing the gap of, which is that I got a gap. We're getting to that gap of August 15th. We're testing that gap on lighter volume. Gaps are support if you test that gap on 10% or lighter volume, and we're going to do that today. If you look down to the volume chart, you can see the volume came in by volume. It looks like probably 55, 60 million. We're not going to reach that today. So we're going to see support at that gap. And if you remember, the 3 ROC of the VIX is already hit 24. That suggests, really got panic in the market, even though the trend, I got the trend reading there also of, not today, but yesterday we hit 1.38 on a close. Day before 1.38 yesterday, day before 1.3. So we're starting to see panic in the trends also. We got a trend right now of 1.2, which is decent. So chances are we're going to find support at that gap. Now,
I get it. Yep.
All the best days to trade are Fridays. Thursday which is today, which sometimes the market will just stay weak until Friday. Sometimes it doesn't. So what I'm leaning up, the worst case scenario, we may close the gap. But what I'm thinking about is going long on tonight's close. Now, we may have enough panic in the market. The more panic you have in the market, the more bullish outcome it is. So if you get a little bit of panic, you get a little big bounce. If you get more panic, you get a bigger bounce. If you get the whole market blowing to pieces, you got a major bottom.
You're really in business. Yeah, right.
So, that's how it works. That's when people are calling me up on panic. I mean, if they're calling me, then they're really panicking. That's usually
that's a good sign. So, exactly. So you're thinking of going long tonight instead of waiting going long tomorrow night, right?
Pardon?
You're thinking of going long tonight versus tomorrow night that it might close the gap. Or you're going long tonight and you figure it can close the gap and come right back tomorrow.
Yeah, if it goes, it's because I have enough information here with the VIX, with the trend, with the volume studies, suggests at a minimum we should get to the gap on Monday. Monday's gap, we gap down on Monday.
Okay.
So it's and maybe we bust through it. Depends how if we got strong volume coming off this potential bottom, and we see volume really pick up, then it may go up higher. But on a short-term basis, you got the VIX, you got the SPX tilt ratio almost to a bullish area. It's quite there, but it may get there tomorrow. I don't know. But your downside is limited. So when you start entering into a gap,
I get it.
Volume,
I get it.
The volume's not going to increase after the gap. It's going to stay low or even lower, especially on Fridays. A lot of times Fridays are kind of dead, volume-wise. So, is today better than tomorrow? I don't know. Sometimes I got lucky and waited till on Fridays, picked out the lows, and sometimes I had to chase after a trade because Friday was
I'm
up.
with you.
So
I'm with you. You know, it's going to be interesting too, Tim. You know, the summer's over, so the volume might be a little bit bigger tomorrow. You know, I mean, everyone's back from, Labor Day, a different ball game. So we'll see. But the volume's been light, the last couple of days, so.
Yeah, it's just kind of trying, but it's got enough clues or.
Yes, no, I get it. I get what you're saying.
I don't know. Maybe things change on the close. We'll have to wait and see. We got time to go over another chart here.
Oh yeah, big
this
time.
Is a pretty good chart on chart 5.
Okay, I have it.
All right, this is. I look at weird stuff, but anyhow, the middle window is a daily silver gold ratio, and I just used the ETFs, SLV and GLD for the silver gold ratio.
Yeah.
And I started looking at there's a couple of different ways you can use this chart. You can use the RSI, if the RSI of the SVS ratio gets around 30 and turns up, it's the bottom. And I messed with the bottom, but also I found out that if he gets around, the ratio gets around 0.05 to 0.115, which is that tan line or the tan shaded area going across the middle of the chart.
Yes, I see that. Yes.
That's where support is on that ratio.
That's powerful. Yeah, I can see that.
If you go back to the COVID crash, it went way below it, but that was a crash. Nobody.
Sure.
That was an anomaly. That was nobody was expecting that, and so that got pushed out of the park. But over other times, it was at a low, and right now we're in that region right now. That this is probably a support area on SLV gold. If it is, then this ratio should rally. If the ratio rallies, GDX rallies. That's how that works.
Right.
So, so anyhow, even though gold's kind of it's pulled back, it's kind of dead. The GLD. The SLV GLD ratio suggests this is a support area, and we should see a bounce out of that. To help support that idea, let's go to chart 6.
Okay. I have
chart 6. Yeah, it's just a momentum indicator. It measures the bottom window. It just measures the up-down volume on a 50-day average. As long as this indicator stays above 0, we're about plus 11 right now.
Yeah.
Then the market's in an uptrend, and it works pretty well. It gets close to the highs. It's not a perfect indicator, but it's a good momentum indicator. So these two indicators, even though the market's kind of dead. It does suggest that the uptrend's still intact. We're not seeing internal weakness yet. So,
and this has been a hard trade to stay in. It's interesting.
Yeah, it's kind of choppy, but the trend's still up.
So. I love it. Well, listen, Tim, this was fantastic. You have a great weekend, safe weekend, and we can't wait to talk to you on Tuesday.
All right, see you then. Right. Thanks a lot.
Okay, man. Thanks so much. Stay right there, folks. Come right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. We have Dow. Dow's up. Dow's down 270. Nasdaq's up 16. S&Ps are up 24. Now, what's going to get interesting here is that, and thanks, Dan, for putting that in the den. The jobs data is going to come out tomorrow, folks, at 8:30 in the morning. And, Tim's looking for a rally. So it's going to be really interesting. It's like, what is the catalyst? Well, jobs data would be one of the catalysts. So we'll see how this shakes out tomorrow morning. That comes out at 8:30 tomorrow morning. That will move markets. There's no doubt about it. Now, what's really intriguing, listen to this, man. This is wild. And, he's probably talking his book at the same time, but it's good info. John Paulson, right? He was just interviewed on Bloomberg this afternoon. I actually watched the interview. Now, the headline says that he's thinking rates can get as low as 2.5. But on the interview, he was actually saying 3%. And then he said perhaps 2.5. He was looking at 3% by the end of this year. Okay. Now, when you look at the Fed, and Tommy was talking about this morning, that is one monster move, man, because we're at 5.50 to 5.75 right now. So to get to 3, he's saying 3 at the end of 2025. Yeah, and he's saying that can get to 3 at the end of 2025. There's no doubt. That's 2.25 down, and we're talking 15 months. Yeah, that can fly. The way the market is actually set up right now, meaning the future bond market, they're looking for 1.5 points before January 1st. So that is going to be something else. We'll see. We'll see how that works out. Let's go look at Toll Brothers, a couple of these real estate, because if we do go down that quick, what's going to happen is that you're going to see a huge move. Yeah, so Toll Brothers is off the highs. Home Depot. The real estate business is all about the rates. There's no doubt. And you go down that fast, this is off the highs too. There's nothing special right now. Well, what has happened is that the home builders hit all-time highs. Last, 5 to 8 days, they've been pulling back as the market has. So they're going to go with the market too. We'll see where this shakes out. The structure itself, though, is a big deal. There's no two ways about that, meaning the interest rate structure, where is it going to be? Because what you also have is that you have a huge amount of folks, and you're talking about millions, that have built up huge equity very quickly in their homes. And what we will see unleash is a huge amount of HELOCs. Now, a HELOC, folks, the bottom line is that you put in a second mortgage on your home, and you can kind of do whatever you want with the money. Now, and you don't pay. What happens with a HELOC is that you don't pay until you actually use it. So you apply for a HELOC. Let's say that you get equity in your house of a couple $100,000. If you want to apply, they'll probably give you 100 out of that. Okay, so you apply for 100, and what ends up happening, you can use it as you want, and you don't get charged interest until you take it out. So you can take it out, put it back, take it out, put it back, do all the. But I expect a huge amount of that happening because it doesn't affect the first mortgage rate. And, most folks are not selling right now because they have such good interest rate structures on the first mortgage. And they won't move either, So I think we're going to see that, and we're going to see that very quickly when these things pull back a bit. That's kind of the way it's set up. You get these mortgage firms, they're ready for it. You get plenty of brokers out there ready for it. So we'll see where it's going to go. That's the bottom line. And I expect you're going to see that very quickly. Now, if we go overseas, and we take a look at the DAX overseas, why the DAX? Because if you pay attention to the DAX every morning before you start trading, particularly, the breed that we have at TFNN, meaning that, there's a lot of day traders, plenty of investors too. But when you're day trading, it's really important to, speculate where the market's going. And if you take a look at the DAX failed its high. The high got over 18,890, failed in one day. Actually got over it, closed below it, and it's rolling over. So, today was a timid day actually for the DAX. It was only down 15. The two anomalies today is this, folks. The DAX is only down 15. And what you did have is that if I go to the dollar, which you're going to see that the dollar was lower and the market was lower. Now what has happened is that when the dollar is lower, the market got some juice. Now that's telling me that that's how weak this market actually is. So this is where it's going to get interesting. Now let's go deal with the gap that Tim was talking about. So we take a look at this because what you want to do, you be prepared for tonight, of course, and then prepared for tomorrow. When I asked him the question about, the bottom line, you might go long tonight, because he doesn't want to miss it. And he brought up Friday, and the last time that there was a low, folks, it was on Friday. Tim nailed this thing, beyond belief. He nailed that high volume low on August 5th. I don't know if it was a Friday or not, but he nailed that one for sure because he went long on the close, okay? And he got the whole thing all the way up. So in this particular one, it'd be like, okay, where my speculation is going, the first one would be more than likely we're going to go into that gap tomorrow. So the real question is going to be, as we go into the gap, do we have an expansion of volume? And what we do have is that, the bottom line is that you have people back from vacation. Some people. This is the first week, so there's still plenty of people that, they're getting there, but they're not there yet. But we should have more action. So what we would look for tomorrow is that you look for a nasty market. I'm setting this up as a bullish scenario, okay? You look for a nasty market. You'd look to get to that gap and then reject it. Okay, so that's one setup. That'll be the setup for Tim Wood and how he's working. My take on this is that, and particularly the way that the market's been trading the last couple of days, folks, is that we're going to blow that thing away. So we'll see. We'll see how this thing shakes out. There's no doubt. The market's been oscillating all day today, and to me, that's building cause for higher price, for lower price rather. So we'll see how the whole thing shakes out. It's going to be intriguing because it is a messy market. There's no doubt. And then if we get to the gold market, as I said to Tim, it's a hard trade to stay into. Because of the fact, what I don't like about the gold is this. Let me show you something. I don't like, when we bring this on, there we go. I don't like the failures. Here, let me put this back for a year. There we go. What I don't like, right here, is that the failures that we have at the 39.41 are pretty intense. Now, the 39.41 I'm getting goes back to the last July 17th. We had volume out there of 23 million. Well, we made a high with 13 million. That doesn't fly with me. And then it gave it up on price. Then what you had is that on Tuesday, we came down with volume. And you're up with dramatically lighter volume today. That to me says that that's weakness, man. And you're not in the higher range again. And the GDX, until it got the higher price, has failed quite a bit. And I think right now I get another failure. We'll see. Stay right there, folks. Come right back. We have the Dow down 250. NASDAQ is up 8. S&Ps are off 24. We're coming right back.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have the Dow trading down at 266. NASDAQ is off 2. S&P is down 24. Now, let's take a look. Get this set up. We're going to the SPY first. Okay, so when we take a look at this, what you have is that you're down 230. You get 34 million shares, which is light volume. The beginning of the gap is 553.36. To close the gap is 544. We hit 548.70, and Timur just did go long. So he's going long on the close. And I suspect what's happening is that, we'll see how this shakes out. But the bottom line is that, like, the way I look at this right now is that, let's see, what is that number? 550. Yeah, you're below 553, so it's like, okay, that gap's going to get filled. So that's a 544. That'd be down $4 from here. Take a look at the Qs. The Qs are flat. They're down 24 cents right now. Now the gap in the Qs is a lot lower. We blew by one gap. One gap, the high was 465. Oh, interesting. Oh man, look at this. Oh, I see. Oh, baby. Oh, this is good. Listen to this. Okay. So what we did today, we not only tried to get higher, we got higher into the 465 level. We hit 465.36, and it couldn't hold price either. That's the gap above it. Now the gap below it is at 454. It's a small gap, but it's about a 1.5 gap. So we'll see how that shakes out. My take is that we get an ABC down. That's how this is shaking out. And we'll see. And the preliminary news is that the jobs number is going to be terrible. So that's from the ADP report. We'll see how this shakes out. Always remember, folks, the bear can claw your heart out, the bull can run you over, and thank God there's always another trade. Health, happiness, and prosperity. Have a great night, folks. Have a safe night. Back and visit Tommy tomorrow morning. He'll be on 9 o'clock. Good, folks.
Building wealth trading in the stock